Welcome back to the deep dive. I'm truly excited you're joining us today because we are about to plunge into a corner of the healthcare world that, well, for most of us, operates entirely behind a veil. It's this critical, really complex machine, yet it often only registers in our lives when we get, a bill in the mail. So have you ever really stopped to wonder what happens after you visit the doctor, after your consultation, after that lab test, and your insurance is supposedly billed, you
Yeah.
swipe your card, maybe pay a copay, and then silence.
Yeah.
Until a few weeks later, maybe a statement arrives that might just leave you scratching your head. What on earth is going on behind the scenes during that time?
That's precisely what we're here to unravel today. Our deep dive is into the intricate, often unseen, yet absolutely indispensable process known as manual payment posting in medical billing. Now, that might sound incredibly specific, perhaps even a bit, well, tedious.
Yeah, maybe a little dry.
Maybe. But understanding the seemingly old school method reveals some really profound insights into the true financial flows of healthcare. It sheds light on how your patient responsibility, what you owe, is ultimately determined. And it highlights the surprisingly vast amount of human effort still interwoven into what many assume is an entirely automated digital industry. It's like a hidden linchpin, a critical cog in the massive engine of healthcare finance.
Right. And to guide us through this surprisingly complex landscape, we're drawing directly from an incredibly detailed and practical source. Excerpts from manual payment posting and medical billing. This isn't just some dry textbook. It's a meticulous, step-by-step breakdown that really illuminates every single phase of this process. Our mission, as always, is to extract the most important nuggets of knowledge, those surprising facts, from this material to make you, our brilliant listener, truly well-informed about this vital behind-the-scenes operation. We want you to understand not just what happens, but really why it matters to you.
What's truly fascinating here, and a core insight we'll keep coming back to, is how this seemingly old school or manual method remains utterly indispensable. It's the human element stepping in to handle the unique complexities, the edge cases, the non-standard situations that even the most sophisticated electronic systems sometimes just can't quite grasp or reconcile. And this directly impacts how much you might end up paying out of pocket, whether your bill is accurate, and fundamentally the financial health and sustainability of your healthcare provider. It's about more than just data entry. It's really about financial integrity.
Okay, let's unpack this then. We live in an age where, everything from our banking to our groceries is increasingly automated, feels like it anyway. Yet here we are talking about manual payment posting in a multi-trillion-dollar industry like healthcare. So let's start with the fundamental question. What exactly is manual payment posting, and why does it even still exist, today?
That's a perceptive question, and you're right to question that initial assumption of total automation,
Right.
because it's not total. At its core, manual payment posting is precisely what it sounds like. It's the process of a human, a person, manually entering payment details from insurance companies or, of course, directly from patients into a practice management or PM system.
The PM system.
Yep.
That's the main software the doctor's office uses.
Exactly. That's the software system a healthcare provider uses to manage all sorts of things: patient demographics, appointments, billing, clinical notes, the works. Now, for those of you familiar with healthcare IT, you know that ideally payments arrive electronically. They come via what are known as electronic remittance advices, or ERAs. These are basically digital versions of an explanation of benefits, usually transmitted in a standardized format, the 835 electronic file format.
Okay.
And these ERAs, they can often be automatically posted by the PM system. That's the dream scenario for efficiency, right? Less manual work.
So the system can do it automatically sometimes, but clearly not always. Where's the disconnect? Why the manual part?
The crucial context here is why manual posting is still so prevalent. It's specifically for those, well, myriad situations where electronic payment posting via ERAs or that 835 format simply isn't available. Or, and this is critical, for payments that just don't conform to those standard electronic formats.
Like what kind of situations?
Think about it. A small, maybe a rural insurance company might still send paper checks and paper EOBs through the mail. It happens. Or a patient might pay their copay in cash at the front desk.
Right.
Perhaps an insurer sends a payment for multiple patients on one single check, but the accompanying EOB isn't structured in a way that allows for easy automated processing by the software. There are countless scenarios like that. So it highlights a very real, persistent gap in automation. Even in our highly digital age, a significant segment of healthcare finances still relies heavily on a human touch.
Which raises that question you mentioned.
Exactly. It raises an important question for anyone interested in the future of healthcare. Why isn't everything electronic? And it comes down to a complex interplay of factors. The sheer diversity of payment methods, the vast number of different payer rules and proprietary formats. Every insurance company does things slightly differently.
Of course they do.
Right. And frankly, the legacy systems many healthcare providers, especially smaller practices or those in niche specialties, are still operating with. Not every small practice, or even some larger ones, has the sophisticated infrastructure to handle every single transaction electronically, especially when dealing with hundreds of different insurance companies, each with their own unique processes and data quirks.
Mm.
It's often the sheer edge cases, the exceptions to the rule, that make manual posting indispensable.
That makes so much sense. It's not just about old tech. It's about the sheer variety and the constant curveballs in how payments actually arrive. But, okay, beyond being a technical necessity, why should we, as listeners, as patients, as consumers of healthcare, actually care about this seemingly niche manual process? What's its real impact on the grand scheme of things, and specifically on us?
Oh, it's absolutely critical, and its impact is far-reaching. This isn't merely some administrative chore in the back office. It's absolutely fundamental to the financial integrity of any healthcare practice or system. Imagine a hospital or a clinic that sees hundreds, maybe even thousands of patients every single day.
Yeah.
Each visit generates a claim, and each claim eventually results in a payment, hopefully from an insurer or a patient. Now, if those payments aren't posted accurately and promptly, the entire financial record of the practice quickly descends into chaos, seriously. And this can lead directly to incorrect patient billing. And that's where you come in.
Right. That's the part we see.
Exactly. You could receive a statement for an amount you don't actually owe, or for a service that's already been paid for by your insurance. That's not just an inconvenience. It erodes trust, leads to frustrating phone calls to the billing department, disputes, and just wasted time for everyone involved.
So it's not just about the provider's bottom line. It's about our confidence, our bills being right, and things running smoothly.
Exactly. Incorrect posting can also severely disrupt a provider's overall revenue cycle. If they can't accurately track who has paid what, it becomes impossible to know their true financial standing. How much revenue are they actually generating? What are their outstanding accounts receivable truly? It impacts their cash flow, their ability to pay staff, invest in new equipment, or even just keep the lights on.
Wow.
So while it seems like simple data entry, it's actually the bedrock of financial accuracy, cash flow management, and ultimately patient satisfaction.
Maybe like balancing a personal checkbook.
Kind of. Think of it like balancing your personal checkbook or reconciling your bank statements, but on a massive, incredibly complex scale. You've got multiple payers, different rules for every transaction, intricate calculations for every single service line. It's way more complicated.
Okay, yeah, much bigger scale.
And if one number is off or one payment is misapplied, the whole system is out of whack. It ripples outwards, affecting both the provider and you, the patient. It requires an almost obsessive level of precision.
That analogy instantly makes it incredibly relatable. Not just tedious, it's the bedrock of trust and functionality in healthcare finance. Okay, so now that we understand the what and the why, let's really dive deep into the how. Our source material meticulously breaks this process down into 10 distinct steps. Let's start at the absolute beginning, the very first domino, receiving the payment and the EOB, that explanation of benefits.
Indeed, this is where the entire manual payment posting journey kicks off. Payments can arrive in a couple of primary ways, each with its own set of challenges. First, from insurance companies. This might be in the form of a good old-fashioned paper check sent through the mail. Seriously, still happens.
Still happens?
Oh, yeah. And even if a provider receives many EFTs, electronic funds transfers, directly into their bank account.
Which sounds more modern.
It is, but they still need the accompanying explanation of benefits, the EOB, to know what that payment is actually for. You can't just get money without knowing why. And often, particularly from smaller or regional payers, that EOB still arrives as a physical piece of paper. This document, the EOB, it's truly the Rosetta Stone for the entire payment posting process. Without it, a payment is just a mysterious sum of money sitting there.
So a check without an EOB is basically useless? Can't do anything with it?
Pretty much, or at least you can't post it accurately. The EOB is critical because it meticulously details everything about the claim or claims it relates to. It will list the specific claim numbers, the original billed amount from the provider for each service, the allowed amount, which is what the insurance company has contractually approved for that service.
Usually less than the billed amount, right?
Often, yes, due to
Yep.
contracts. It also shows the actual paid amount they sent, any patient responsibility like copay, deductible, coinsurance, and critically, any denials or adjustments that were made to the claim, along with the reason for those adjustments. It's the full narrative of how that claim was processed by the payer. Imagine trying to reconcile a bank statement where the deposit amounts are listed, but not who sent them or why. That's a payment without an EOB. Then, of course, payments also come directly from patients. These can be cash payments, personal checks, credit or debit card payments, either in person at the front desk, maybe over the phone, or increasingly through secure patient portals online. Regardless of the method, there are usually accompanying receipts or payment stubs that provide the necessary details for posting, though these are often much less detailed than a full insurance EOB. A key challenge here, right at the start, is just managing the sheer volume and variety of these incoming documents and payments, ensuring nothing gets lost or misfiled. Organization is key.
So when I pay my copay at the doctor's office and get that little slip of paper, that receipt, that's part of this puzzle, right? It's going to be manually processed later, maybe batched with other patient payments for the day.
Precisely. That small slip is a critical piece of the puzzle, and it needs to be reconciled and posted just like a large insurance check. It's often aggregated with other cash, check, or credit card payments received that day, maybe balanced against a cash drawer report, and then each individual payment is posted. That brings us neatly to our second step, which is pure investigative work and truly a crucial validation step. Matching the payment with the correct patient and the correct claim.
Ah, the crucial validation step. I can just imagine how easy it might be to misapply a payment, especially in a busy clinic or a large hospital system. You might have multiple patients with similar names, or maybe even twins.
Oh, absolutely.
The financial repercussions of getting this step wrong must be significant.
Absolutely. This step demands meticulous, almost forensic attention to detail. The billing staff can't just take a payment and blindly enter it into the system. That would be chaos. They have to precisely locate the correct patient account within their PM system. They'll use multiple identifiers for cross-referencing. The patient's full name, obviously, the specific date of service, DOS, when the patient actually saw the doctor, or maybe a unique claim number or encounter number that's tied to that specific visit.
Okay.
The patient's insurance ID number is also a vital piece of information provided on the EOB or payment stub. The goal here is multi-layered, to ensure the payment aligns not just with the right patient, but also with the correct provider, especially in a group practice with multiple doctors.
Right. Different doctors might get paid differently? No.
Exactly. Also, the specific location where the service was rendered, if it's a multi-site practice, and the exact payer, meaning which insurance company the payment came from, or if it was a patient payment. If we connect this to the bigger picture, just imagine the chaos, the financial black holes, if payments were constantly misapplied. A patient could receive a bill for a service their insurance already paid for, leading to immense frustration and angry phone calls.
Definitely.
Or a provider might mistakenly think a claim was denied when it was actually paid but posted to the wrong account, leading to lost revenue or unnecessary costly follow-up efforts trying to collect money they already have.
Yeah, that sounds bad.
What stands out here is the sheer attention to detail needed just to get started. It's like detective work before the data entry even begins, ensuring the integrity of the financial records from the very first input. It's a critical error prevention point.
It's like having to identify which puzzle piece goes where before you even start building the picture. Okay, so you've got the EOB, you've got the payment, you've carefully matched it to the right patient and claim. That leads us right into step 3, which sounds like the core data entry phase. Actually entering those precise payment details into the practice management system. This must be where the real manual intensity kicks in.
This is truly where the rubber meets the road, or perhaps more accurately, where fingers hit the keyboard for potentially long stretches. And critically, this is done for each individual service line within a claim. Remember, a single patient visit isn't just one charge usually.
Right, there could be multiple things done.
Exactly. It can involve multiple service lines for different procedures, the consultation itself, maybe lab tests, injections, or supplies used. Let's say a patient had a standard office visit and a blood test drawn in the office. That's at least 2 service lines right there. For each of those lines, the billing staff manually inputs a wealth of information derived directly from that EOB. Let's break it down. First, the billed amount. They start with the original charge the provider sent to the insurance company. This is what was initially requested for that specific service.
Okay.
Second, the allowed amount. Then comes the allowed amount, which is the amount the insurance company has contractually agreed to pay for that specific service.
Yeah.
As we said, this is often less than the billed amount due to negotiated rates between the provider and the insurer. Third, the paid amount. Following that, they enter the actual dollar figure the payer sent for that specific line item. This is the money that actually hit the bank account related to that particular service. Fourth, the adjustment amount. Next is the adjustment amount representing any write-offs. This typically happens due to those contractual agreements where the provider has agreed not to bill the patient for the difference between their billed charge and the insurance's allowed amount.
So, if a visit was billed at $200, but the allowed amount is $150.
Then there's a $50 contractual adjustment, or a write-off exactly. That $50 just disappears, essentially. The provider absorbs it. Fifth, patient responsibility. Then crucially, the patient responsibility. This details how much of the allowed cost is attributed to the patient's deductible, their copay, or their coinsurance for that specific service line. This is the amount that ultimately becomes your financial burden as the patient. And finally, sixth, reason codes. They enter specific denial codes or adjustment codes known as CIR, Claim Adjustment Reason Code, and RRAC, Remittance Advice Remark Code. These standardized codes explain why the full amount wasn't paid or why an adjustment was made. We'll talk more about these.
Wow.
The sheer volume and granularity of this data entry is what makes this step so labor-intensive. It's not just entering a single total payment amount, it's dissecting every single line item on that EOB, which can sometimes list dozens of services for complex visits or procedures, and typing in each corresponding value billed, allowed, paid, adjustment, patient portion, reason codes, ensuring absolute accuracy for every single one.
Imagine doing this for hundreds, maybe even thousands of claims a day in a large practice or hospital. It requires immense focus and must be surprisingly mentally taxing.
It really is. It demands concentration.
Yeah. You really emphasized manually and each line item. That paints a very clear picture of the scale of work involved. I mean, doing that hundreds, thousands of times a day must be incredibly time-consuming and demand relentless focus.
Yeah.
And you mentioned those reason codes, the pair arcs and RARCs, which leads us nicely into step 4, adjustment posting. This sounds like where the real nuances and complexity start to pop up, where the story behind why the payment isn't what was billed truly begins to unfold.
It absolutely is. This is where claims processing can get messy and where the biller's interpretative skills are truly tested. Because it's not always straightforward. If the insurance company denies a portion of the claim or reduces the payment for a specific service for any reason, the biller's job is to identify this discrepancy on the EOB and meticulously enter the adjustment amount and, critically, its specific type into the system. For instance, was it a contractual adjustment, that difference between billed and allowed we just talked about, where the provider agreed to write off a certain amount because of their negotiated fee schedule? Or was it an adjustment because it was a non-covered service, something the patient's plan simply doesn't pay for? In that case, the patient might now be responsible for that specific amount.
Ah, okay. Big difference for the patient there.
Huge difference. Or perhaps it was a bundling adjustment, where the insurance company believes one service should be included in the payment for another service and won't pay for it separately. There are many possibilities. This isn't just about noting a reduction in payment, it's about assigning the correct reason for that reduction in the system.
So it's not enough to know that there's an adjustment. You absolutely need to know why.
Precisely. That's why using the appropriate key ARC, the Claim Adjustment Reason Code, and sometimes the RRR, the Remittance Advice Remark Code, is so vital. These aren't arbitrary codes made up by the practice. They're standardized codes used across the industry, defined by national bodies. They provide a consistent explanation for why the payment wasn't the full billed amount, or even the full allowed amount in some cases.
Can you give an example? What does the key arc tell you?
Sure. For example, a SAR of 45 means charge exceeds fee schedule maximum allowable or contracted legislated fee arrangement. That's your standard contractual adjustment.
Okay.
But a SAR of 96 means non-covered charges. That tells the biller something completely different. The service isn't covered by the plan. Or maybe a RRC, like M1, which might clarify a denial by stating X-ray not taken. These codes tell a very specific story.
That's fascinating. So these codes really do tell a story. How does that story help the biller in a practical sense?
Absolutely. Imagine a claim for, say, an office visit where the provider also gave an injection. The original bill goes out, the EOB comes back. The payment for the office visit looks fine, but the injection line shows a zero payment and maybe a SARC 97, which means payment adjusted because the benefit for this service is included in the payment allowance for another service procedure that has already been adjudicated.
Bundling again.
Exactly. This instantly tells the biller, don't waste time appealing this as a denial. The insurance considers the injunction cost included in the office visit fee under their rules. This knowledge is crucial. It means the biller won't spin their wheels appealing something unappealable. Instead, they'll simply post the adjustment correctly, know not to bill the patient for the injection, and perhaps flag it internally if this payer always bundles this way.
Right.
That's the story these codes tell. They're not just about what happened, but why, and most importantly, what to do next. This step is critical for several outcomes. It ensures accurate patient billing because you need to know if that reduced payment means the patient owes more or if it's a provider write-off. Very different outcomes. It's also crucial for secondary billing, which we'll get to in a minute, and for accurate financial reporting down the line. Without accurately posting these adjustments with the right reasons, the financial picture of the practice would be completely distorted. You wouldn't know why you weren't getting paid in full.
So it's not just about the numbers, but the story behind the numbers, and that story dictates the next action.
Yeah.
That makes total sense.
Okay.
After all that incredibly detailed data entry and deciphering the adjustments, then we move into step 5, balancing and verification. I imagine this is the crucial quality control step after all that intense manual input. Gotta check your work right.
Precisely. You absolutely have to check your work. This is the moment of truth, the financial integrity check for the posting process itself. Once all the payment and adjustment details are meticulously entered for a specific batch of claims, or maybe for a day's worth of EOBs, the biller performs a critical reconciliation right there in the system. They ensure that the fundamental financial equation balances, much like balancing a complex spreadsheet or, yes, your checkbook. The principle is the same. The billed amount for a given claim or set of claims must equal the sum of the paid amount plus all the adjustments posted plus any patient responsibility assigned. It's a precise mathematical equation. Billed amount, paid amount, plus adjustments plus patient responsibility.
And if it doesn't add up?
If those values do not balance to zero, if even a single dollar or sometimes even a single cent is off, it's a major red flag. The system usually won't let you finalize the batch or the posting session until it balances.
So what happens then? Is it easy to find the mistake? Or is it more detective work? Does the system help?
It's absolutely more detective work. The system will tell you that it's out of balance, but usually not why. If the values don't balance, the biller then has to turn into a financial detective again and investigate what went wrong within that batch they just entered. This could involve identifying simple data entry errors, a typo, a transposed number, which are pretty common given the sheer volume of numbers being typed manually.
Sure, easy to do.
Very easy. It could also mean an incorrect interpretation of the EOB, where maybe a specific detail about patient responsibility was missed or misunderstood, or perhaps a calculation error was made when figuring out the adjustment amount. Or sometimes it might indicate a system mismatch, maybe a glitch, or perhaps a payment was inadvertently posted to the wrong account initially within that batch and needs to be corrected. This is where the human expertise truly shines again. An automated system might just flag a discrepancy without explaining why it occurred or how to fix it, but a human biller can dive into the specifics, review the EOB line by line again, compare it meticulously against the system entries they just made, and pinpoint the exact source of the imbalance.
Like double-checking their work manually.
Exactly. They might look at their batch summary report, re-add their columns using a calculator, or even pull up the original patient chart or EOB image to verify dates, services, or payment details. This ensures absolute accuracy before moving forward, preventing those errors from cascading down the line into patient bills or financial reports. It's painstaking, yes, but absolutely essential for financial trustworthiness.
That makes perfect sense. It really highlights that irreplaceable human element in catching subtle mistakes. So we've talked about adjustments, which are reductions or changes in payment, but sometimes the insurance company just says, nope, completely denies the whole thing. What happens when a claim is just flat out denied? That brings us to step 6, handling denials and rejections. This must be a big part of the job.
Oh, denials are a major ongoing challenge in medical billing. They're a huge focus, and managing them effectively is absolutely crucial for any practice's financial health. You can't just ignore them. Manual posting handles denials with specific steps to ensure that potential revenue isn't just lost forever because a claim was rejected initially. When a claim, or sometimes even just a single service line within a claim, is denied by the payer, the biller first enters the specific denial reason code into the system, again, using those standardized CAR key codes from the EOB. This code explains why the claim was rejected, for example. Maybe there was a lack of prior authorization required for that service.
Oops.
Yeah, big oops. Or incorrect coding. Perhaps the wrong diagnosis code was linked to the procedure. Maybe the service wasn't deemed medically necessary in the insurer's eyes based on the documentation submitted. Or it could even be something as simple as they think it's a duplicate claim submission.
So those codes are just as important for denials as they are for adjustments. They tell you why you got rejected.
Exactly. They're the diagnostic tools for a denied claim. They tell you where to start investigating. Once that specific denial code is entered, the claim is then explicitly marked or flagged in the system for follow-up or appeals. This flagging is crucial. It ensures the claim won't just sit there forgotten in a digital pile. It signals that it needs action.
Like putting it in a special work queue.
Precisely. It often routes it to a specialized denials management team or a specific biller responsible for appeals. It needs to be reviewed, potentially reworked or corrected. Maybe a simple demographic error needs fixing, like a typo in the patient's name or birth date. Maybe a coding modifier needs to be added. Or maybe more documentation needs to be sent. And then, importantly, it needs to be resubmitted to the insurance company in a timely manner, following their specific appeal guidelines. This step is incredibly vital for recovering revenue that would otherwise just be lost. For a large practice, unaddressed denials can literally represent millions of dollars in lost income over a year.
Millions. Wow.
Easily. And it also ensures that the patient isn't incorrectly billed for a service that should have been covered by their insurance if the denial was processed incorrectly or can be overturned, which again comes back directly to patient satisfaction and trust. Without this meticulous denial management process triggered during payment posting, a practice could hemorrhage money and patients could face unnecessary financial burdens or endless confusion. It's an ongoing battle, truly, and a well-trained, persistent biller is a crucial asset in that fight.
It really sounds like an intricate, often frustrating loop of problem solving and persistence. And speaking of loops and continuous processes, for some patients, the financial journey isn't over even after the primary insurance pays or denies. They might have a secondary or maybe even a tertiary insurance plan. That brings us to step 7, secondary and tertiary billing. How does manual posting handle that?
That's right. For many patients, especially those may be covered under Medicare and a supplemental plan, or under 2 working parents plans, the process extends well beyond just the primary payer. Once the primary insurance payment has been posted manually or electronically and all the adjustments and patient responsibilities have been meticulously accounted for from that primary EOB, any remaining balance needs to be prepared and submitted to the secondary insurance company. The primary EOB details are absolutely crucial here. You can't bill the secondary without it.
Why is the first EOB so important for the second insurance?
Because the secondary payer needs to know exactly what the primary insurance did. The EOB shows what the primary insurance paid, how much they adjusted off, and why, using those CARCs, and what amount they determined is the remaining patient responsibility. This EOB information must often accompany the claim sent to the secondary payer, either electronically attached or sometimes even physically mailed. It proves what the primary did. And here's where the manual effort can actually compound. Even if the primary claim processing and payment posting happened electronically, manual entries might still be needed to accurately generate the claim for the secondary insurance.
Really? Even if the first part was electronic?
Sometimes, yes. The new claim going to the secondary payer must incorporate the exact remaining balance information from the primary EOB. It also needs to include specific details from that primary EOB, like the amount paid, the adjustment reasons, the date processed by the primary, to inform the secondary payer precisely what the primary insurance did or didn't cover.
So the original manual work, or at least the detailed data from the primary EOB, directly dictates the follow-up work for the secondary claim.
Often, yes, especially in complex cases or when systems aren't perfectly integrated for secondary billing automation, which is common. For instance, if the primary payer covered 80% of the allowed amount and the secondary plan is supposed to cover the remaining 20%, a common scenario, the biller needs to ensure that the secondary claim accurately reflects the primary payment amount, the contractual adjustment, and the remaining balance being billed. So while many secondary claims can be transmitted electronically these days, the initial detailed posting of the primary EOB and understanding its nuances often directly feeds into the creation and validation of these subsequent claims. It might require manual review and data entry to ensure the secondary claim is clean and accurate before it goes out. It's a cascading effect of the initial payment posting effort, ensuring accuracy across multiple payers, each potentially with different rules and system requirements. This is a common area for delays and errors if not handled with extreme care, as it's not always a straightforward automated handoff from one payer to the next. Coordination is key.
So the manual effort, or at least the need for human review, cascades, ensuring accuracy across multiple payers. That's intense. Okay, and finally, after all this meticulous work receiving, matching, deciphering, entering, balancing, handling denials, rebilling to secondary insurers, we get to step 8, patient billing. This directly connects to our listeners' experience getting that statement in the mail or seeing a balance in their patient portal.
Exactly. This is the moment where the financial responsibility, if any, remains after all insurance processing, lands squarely with the patient. This is the culmination for them. Once all payments from the primary and any secondary or even tertiary insurance companies have been meticulously posted and reconciled in the system, the PM system now clearly identifies the final outstanding balance that is considered the patient's responsibility according to their plan benefits: deductible, copay, coinsurance, non-covered services. At this point, a patient statement is generated, usually automatically by the system based on the posted data, and sent directly to the patient either by mail or electronically via a portal.
And that statement should be clear, ideally.
Ideally, yes. A good statement should be clear and relatively easy to understand, detailing the services received, the dates, the amounts billed to insurance, a summary of what insurance paid and adjusted, and the final amount the patient owes. Transparency is important. Simultaneously, the practice management system is updated to reflect that all insurance payments have been posted and accounted for, and it now shows what the final open balance is on the patient's account. This ensures that when a patient calls with a question about their bill, which happens a lot, the billing staff looking at the account has the most current, accurate, and complete information at their fingertips to explain the charges. It's the culmination of all the preceding steps, translating all those complex insurance transactions and postings into a clear, actionable bill for the individual. But importantly, if any previous step in the manual posting process was incorrect, a misapplied payment, a wrong adjustment, a misdenial follow-up, this is often where the patient experiences that error directly, leading to understandable frustration, confusion, and those calls to the billing department we mentioned. Accuracy upstream prevents problems downstream.
That makes perfect sense.
Yeah.
It's the final, tangible result for the patient of all that invisible work. Okay, almost there. To ensure everything is locked down financially, to prevent discrepancies and provide oversight, we have step 9. Reconciliation. This feels like the ultimate financial safeguard for the practice itself.
It absolutely is the ultimate financial safeguard. Reconciliation is paramount for preventing fraud, catching subtle errors that might have slipped through the individual batch balancing steps, and ensuring that every single dollar that should have been received was actually received and recorded correctly. This isn't just about balancing a single claim or single batch anymore. It's a higher level, often daily or weekly, overarching process of cross-verification. Think of it like an internal audit function. The total payments that have been posted in the billing system over a certain period, say a day, are meticulously checked against the daily deposit logs. These logs are the practice's internal records of all the money that has actually come into the practice during that period: checks received, cash collected, EFTs noted. These totals from the system postings and the deposit logs are then further verified against the actual bank statements, ensuring that the money physically deposited into the practice's bank account matches what was recorded as received in their internal systems and logs.
So a 3-way check.
Yeah.
System postings, deposit logs, bank statement.
Often, yes. And sometimes a fourth check against the insurance payment logs or the 835 electronic files, which track payments received directly from specific payers, often by EFT, ensuring those specific large deposits match the sum of postings for that payer.
So what's the ultimate goal here? Just to make sure the numbers match perfectly, or is there a deeper purpose?
The goal is simple conceptually, but absolutely critical operationally: to ensure that the totals posted in the billing system perfectly match the actual payments that were physically received and deposited. No discrepancies allowed. This final check is paramount for several reasons. 1, preventing fraud by ensuring no money disappears unaccounted for between receipt and deposit. Two, catching subtle errors, such as a payment accidentally posted twice in the system, or maybe a check that was logged but somehow never made it to the bank, or an EFT that arrived but was missed in posting.
Right.
And three, ultimately, ensuring that every dollar the practice earns is accurately recorded and accounted for, maintaining impeccable financial integrity and reliable financial reporting. This is the step that guarantees that the complex financial picture created by all the manual and electronic posting is an accurate reflection of reality. It's the moment where the practice's finance department can confidently say, yes, we know exactly how much money we collected today, where it came from, and that it all adds up.
It's the ultimate financial audit, ensuring everything adds up, every single dollar accounted for.
Yeah.
Okay? And then finally, all this meticulous data, all this posting and balancing and reconciling culminates in the 10th and final step, reporting. This is where all that detailed, painstaking manual work combined with electronic data becomes truly useful, revealing trends and strategic performance insights for the practice.
Yes, this is precisely where the meticulous data entry, both manual and electronic, transforms into actionable intelligence for the practice's management and financial teams. From the rich, granular data entered during payment posting, remember all those fields like allowed amount, adjustment amount, patient responsibility, reason codes. From all that, various types of invaluable reports can be generated by the PM system. These include comprehensive payment reports, which can usually be broken down by payer, which insurance company pays the most or the fastest, by specific date range, or even by individual provider within a group. Is one doctor generating more revenue or having more issues? These show exactly who paid what, when, and for whom. There are also adjustment and write-off reports. These are critical because they highlight where and why revenue isn't being fully collected. Perhaps a specific insurance plan consistently requires large contractual adjustments, indicating a poor contract. Or maybe write-offs for non-covered services are high, suggesting a need for better patient financial counseling upfront.
Okay, makes sense.
And critically, denial tracking logs or reports. These categorize and track all the claims that were denied using those reason codes we talked about. They can reveal patterns and rejections. Is one payer denying a specific procedure frequently? Is there a recurring issue with missing authorizations?
So this isn't just bean counting or accounting then. It's really about informing strategy.
Absolutely. These reports are invaluable strategic tools, not just operational ones. They help healthcare organizations monitor critical trends in their payments and denials, allowing them to proactively identify recurring issues in their billing process or with specific payers. For example, if a report shows a sudden spike in denials from a particular insurance company for, say, physical therapy visits, the practice can investigate immediately. Is it a new documentation requirement, a coding issue across the board, a problem with how prior authorizations are being obtained?
Yeah.
They can then work to correct the underlying problem, appeal the wrongly denied claims, and potentially recover significant lost revenue. Or, if adjustment reports show that one specific insurance contract is consistently resulting in very low payments compared to others, that data can be used during contract renegotiations. These reports also critically assess overall financial performance over time, allowing practices to benchmark themselves, fine-tune their operations, maybe invest in better training or technology, negotiate better contracts with payers, and ultimately ensure their long-term financial health and sustainability. It really turns detailed data entry into powerful business intelligence.
Wow. We've just navigated a 10-step process that is, incredibly detailed, highly complex, and relies so heavily on human attention, vigilance, judgment, and sheer persistence. So what does this all mean for the big picture? There are clearly significant benefits and drawbacks to this manual approach, even if it's, as you said, currently necessary for certain things. Let's talk about the trade-offs of this very human-centric process. What are the pros?
The trade-offs are significant, and they form a critical balancing act for pretty much any healthcare provider. On the pros side, the biggest advantage of manual payment posting is its unparalleled flexibility.
Flexibility. How so?
Well, it's the human element providing bespoke solutions, really. It can handle all those non-standard inputs, the paper EOBs we mentioned, payments that come with unusual documentation, or checks that cover multiple patients with only a handwritten list attached.
Things that would choke an automated system.
Exactly. Things that automated systems, which rely on standardized formats like the 835, might simply struggle with, reject entirely, or misinterpret, creating exceptions that still need manual handling anyway. Think about a single check from a large employer group that might cover 50 different patients' copays for a specific month, but the accompanying manifest isn't in a standardized electronic format. A human biller can patiently sort through that, match each payment, and post it correctly. An automated system likely couldn't. It also allows for crucial human discretion and nuanced decision-making in genuinely complex or ambiguous cases.
Like when the EOB isn't clear.
Precisely.
Yeah.
Sometimes a payment comes in that just doesn't fit a neat electronic box, or an EOB has a subtle nuance, maybe even a handwritten note from the payer, or an unusual combination of adjustment codes that requires an experienced human biller to interpret the intent and apply the payment correctly based on their knowledge and the practice's policies. An automated system might just flag it as an error and halt processing, creating a backlog. But a person can make an informed, intelligent decision based on context and experience. This adaptability makes manual posting incredibly useful, maybe even essential, especially for smaller practices that might not have the capital or IT support for highly advanced electronic systems. But even larger organizations need it to deal with a wide array of legacy payers, out-of-state plans, or highly specialized, non-standard services that generate non-standard remittances. It ensures that, ideally, no payment is left unposted and no claim is left unresolved simply because it doesn't fit perfectly into a pre-programmed algorithm.
It sounds like it's almost the, I don't know, the artisanal approach to billing in a way, adapting to the messy, diverse reality of healthcare transactions, rather than trying to force everything into a rigid digital box. But what about the other side of that coin? What are the significant drawbacks? We've heard how meticulous and detailed it is. That must come at a pretty steep cost.
Oh, the cons are equally compelling, and they often represent significant operational and financial pain points for healthcare organizations. The most significant drawback, as you can probably guess from our step-by-step breakdown, is that manual posting is incredibly, sometimes painfully time-consuming.
Yeah, that came through loud and clear.
Each line item entered, each adjustment deciphered and posted, each batch balanced, each denial investigated, it all adds up to a huge amount of human hours. For a busy practice, this means dedicating multiple full-time employees, FTEs, solely to payment posting and its associated tasks like reconciliation and follow-up. This extensive manual effort, by its very nature, also makes the process more prone to data entry errors compared to highly automated systems. Humans, simply put, make mistakes, especially when dealing with high volumes of repetitive data entry day after day. Fatigue sets in.
Right, typos happen.
Typos happen, numbers get transposed, details get missed. And these errors, even seemingly small ones, can then cascade into incorrect patient bills, delayed revenue realization, and require even more time spent on identifying and correcting the mistakes later. This directly translates to it being highly labor-intensive, requiring significant staffing resources dedicated solely to this process. For a small practice, this might mean 1 or 2 full-time billers are largely occupied with posting. For a large hospital system, it could literally be dozens or even hundreds of people in the central billing office whose primary job involves payment posting and reconciliation.
And what about the impact on the speed of getting money in the door, the cash flow? If it's so time-consuming, does that mean payments are slow to actually hit the books and be recognized?
Absolutely. That's another major drawback and a constant source of pressure. These potential delays in payment posting can significantly slow down the overall revenue cycle. If payments received today aren't posted for several days or even a week or more in high volume or understaffed situations, it directly impacts the provider's cash flow. They have the money, but it's not reflected accurately in their financial system yet.
So they can't really use it or count it yet.
Effectively, yes. It delays secondary billing, delays patient billing, and distorts the picture of accounts receivable. This can affect their ability to pay staff's salaries on time, invest in new medical equipment, or simply cover their day-to-day operating expenses and keep the lights on. It's a constant struggle for billing departments. The push for speed versus the absolute need for accuracy. Rushing leads to errors, but being too slow hurts cash flow. So, while manual posting remains critical, even indispensable, for handling those specific non-standard cases and providing that human oversight, it is undeniably a time-consuming, labor-intensive, and error-prone bottleneck in the modern healthcare revenue cycle. If we connect this to the bigger picture, it profoundly explains why healthcare billing can sometimes feel like such a complex, slow, and occasionally inaccurate labyrinth. It's because a substantial portion of it still requires this painstaking manual processing to achieve the necessary level of accuracy and completeness, leading to both financial and administrative burdens for providers and sometimes frustrating delays or errors for patients.
What an incredible journey we've just taken, really unpacking a process that truly underpins the financial health and, frankly, the operational efficiency of healthcare providers everywhere. We journeyed all the way from the moment that initial payment and the crucial explanation of benefits arrive, through the critical detective work of matching patient to payment, the painstaking line-by-line data entry for every single
Just
service,
every single one.
the nuanced complexities of posting adjustments and handling those inevitable denials, the cascading effort required for secondary and tertiary billing, right up to the point of generating accurate patient statements, the rigorous financial reconciliation to make sure it all adds up, and finally, the invaluable strategic reporting generated from all that data. It's truly been a deep dive into the granular detail, the seemingly invisible, yet absolutely vital back-office operation.
And the key takeaway here, I think, is profoundly clear. While modern systems increasingly favor electronic posting, and that's certainly the goal and the direction the industry continues to move in for efficiency,
Right.
manual payment posting remains absolutely necessary in today's healthcare landscape. It's still indispensable for handling those specific non-standard claims, the paper EOBs that still arrive by mail from some payers, and all those diverse patient payments, cash, checks, portal payments that don't fit neatly into automated electronic streams. It's really a testament to the persistent complexity and the myriad exceptions that define healthcare finance that this old school method not only endures, but in many ways thrives as a necessary component. Ultimately, the essential human qualities required for this process, that impeccable accuracy, the unwavering attention to detail, a sharp problem-solving mindset for discrepancies and denials, and the thoroughness needed for cross-verification and reconciliation. These aren't just buzzwords on a job description. They are absolutely essential for ensuring the financial integrity of the healthcare provider and ultimately for ensuring your satisfaction and trust as a patient, knowing that your bill is hopefully correct and that the financial wheels supporting your care are turning as smoothly and accurately as possible.
That brings us to a truly thought-provoking conclusion, doesn't it? Considering the sheer complexity we've discussed, the absolute necessity of this process even now, and the intense human effort involved, what implications does this have for the future of healthcare technology and maybe administrative jobs within healthcare? Would we ever truly automate away the need for human discernment, human judgment in such intricate financial flows, especially when it directly impacts patient trust and the financial viability of providers?
That really raises an important question for all of us as we look ahead, I think. In a world that's striving constantly for total automation across virtually every industry, where exactly are the practical limits? Where does automation hit a wall? And where will that indispensable human touch, that human ability to interpret ambiguity, to troubleshoot unexpected problems, and to exercise judgment based on experience and context, where will that always remain critical? Especially when something as vital as your healthcare and the financial well-being of the institutions that deliver that care are so profoundly on the line. It really makes you wonder about the true, perhaps enduring value of human expertise in an increasingly digital and automated world.
Fascinating stuff to ponder long after this deep dive ends. Thank you so much for joining us on another deep dive. We sincerely hope this has given you a whole new appreciation for what truly happens behind the curtain after you leave the doctor's office. Keep exploring, keep questioning, and we'll catch you next time.